How to safeguard wealth in the world of zero interest rates, debt monetization, and call for the more fiscal spending is a question Ray Dalio, Bridgewater Association founder and one of the big names of the financial world, has been wrestled with since well before the 2020. He said a paradigm shift in the global economy is underway and eventually inventing now in favor such as stocks or credit when perform well. Actually, we make some money these days with the stock market, but I guess in a bigger picture that won't be long. I mean the macro viewpoint. So that's why we should have to get advice from the big figures. Whether believe it or not, it will be totally depending on your decision, but listening and get advice and take that attitude is the greatest virtue for all investors. In 2019, Dalio asked, what will be the next best currency or store hold for the world when most reserve currency bankers want to devalue currencies in the flat system and suggest gold as a way to reduce risk and enhance returns? Always, gold is the best asset, following the rich dad Robert Kiyosaki. That is the God's money. Right after the Ray Dalio's comment, gold prices has been soared along with the alt gold named silver. Thursday's note expanded on that thought. Dalio said he felt compelled to clarify what I think of the Bitcoin. Here comes today's main figure, the Bitcoin. I'm not sure the figure is the right word or not, but let's keep it that way. Recently, Ray Dalio said Bitcoin is one hell of an invention and he's considering cryptocurrencies as investment for new funds offering client protection against the debasement of flat money. Funny thing is that he was one of the counter-activists of the Bitcoin and has been spending at the very opposite side of the Bitcoin lovers. But he said that to have invented a new type of money via a system that is programmed into the computer, and that has worked for around 10 years and is rapidly gaining popularity as both of the type of money and a storehold for the wealth, is amazing accomplishment. Dalio wrote in a note to the client and later posted on Bridgewater's website. There aren't many alternatives gold-like asset at this time of rising news for them. At this time, he is not fully supporting and has to put the value in the digital asset, and also says that Bitcoin has a long-duration option in a highly unknown future, and investing in Bitcoin means recognizing the potential to lose about 80%. But at one point, he somehow admitted that Bitcoin is a great invention. And at this time, when we are finding the better option for the next currencies, I guess Bitcoin can be the great option. Following other experts' comment, Tudor Investment Corporation's Paul Tudor Jones and Alan Howard support this idea. Jones started buying Bitcoin in May, calling it gold-like hedge against inflation and the fastest horse in the field of alternative to cash. Bitcoin has since tripled in prices. A month ago, BlackRock Incorporation, the world's largest asset manager, took its first step into the cryptocurrencies. The firm noticed regulations that cash-settled Bitcoin future would be eligible investment into two of its funds. We know the prices of the Bitcoin are fluctuating seriously and its volatility reminds me days of the GameStop. You must remember the Reddit Rebellion and Wall Street bets. Yes, they tumbled a lot these days. But come out of the micro side of the prices, let's find out what exactly is the Bitcoin itself, I mean technically, and how they can be trusted as one of the currencies, and finally how they can be called as the digital gold. Bitcoin has had a banner surge this year. Less than 2 months after breaking the 20k barrier for the first time, the digital currency more than doubled in prices, hitting the height of the $57,489 last week. Every time Bitcoin is proclaimed to be that, it seems to surge back, buoyed by bullish investors, favorable legislation, tech titans tweets, recently Elon Musk. At this point, nearly everyone have heard of Bitcoin, but many folks still don't quite understand how the currency is created and working. It's not printed like cash. It's not a physical object like a gold bar. It's not stored on a piece of plastic like a debit card. It just exists somewhere in a vast digital expanse until it's excavated into circulation by so-called Bitcoin miners. In today's video, we'll cover the major technologies supporting the idea of cryptocurrencies, how the Bitcoin works, and how they can gain the trust and becoming the digital gold. Let's start with the basic question. What is the Bitcoin? Bitcoin is the very first decentralized digital currency that allows peer-to-peer transfer without any intermediaries such as banks, governments, agents, or brokers, using the underlying technology of blockchain. Anyone around the world on the network can transfer Bitcoin to someone else's on the network, regardless of geographical location. You just need to open an account on the network and have some Bitcoin in it, and then you can transfer those Bitcoins. How do you get Bitcoins in your account? You can either purchase them online or mine them. Bitcoin can be used for online purchase and can be used as an investment instrument. Primarily, it's used to buy goods and services like our daily life cash. Bitcoin advantages. Compared to traditional fiat currencies, assets can be transferred faster on the Bitcoin network. The system also has the lower transaction fees because it's decentralized and there is no intermediaries. And it is cryptographically secure. The identity of the sender and the receiver are kept hidden, and it is impossible to counterfeit or hack the transaction. Plus, all of the information is available in the public ledger, so anyone can view the transactions. There are three big pillars supporting the work of the Bitcoin: blockchain, mining and POF, and hashing. Then let's figure them out. At first, what is the blockchain? As mentioned, blockchain is the underlying technology of the Bitcoin. Blockchain is a public distributed ledger in which the transactions are recorded in chronological order. Any record or transaction added on the blockchain cannot be modified or altered, meaning the transactions are safe from the hacking. The block is the smallest unit of the blockchain and it is a container that holds all the transaction details. A block has four fields or primary attributes. Number 1. Previous hash. This attribute stores the value of the hash of the previous block, and that's how the blocks are linked to one another. Number 2. Data. This is the aggregated set of the transactions included in the block. The set of the transactions that were mined and validated and included in the block. The third, nonce. In a proof-of-work consensus algorithm which Bitcoin uses, the nonce is a random value used to vary the output of the hash value. Each block is supposed to generate the hash value, and the nonce is a parameter that is used to generate that hash value. The proof-of-work is a process of transaction verification done in the blockchain. Number 4. Hash. This is the value obtained by passing the previous hash value. The data and the nonce through the Sha-256 algorithm. It is a digital signature of the block. Sha-256 is a cryptographical hash algorithm that produces a unique 256-bit alphanumerical hash value for any given input. And that is a unique feature of the cryptographic algorithm. Whatever input you give, it will always produce a 256-bit hash. And next, what is the Bitcoin mining? Bitcoin mining is a process of verifying Bitcoin transactions and recording them in a public blockchain ledger. In blockchain, the transactions are verified by Bitcoin users, so basically the transactions have to be verified by the participants of the network. Those who have the required hardware or computing power are called the miners. We're gonna talk about this more later, but the important concept to understand here is that there's nothing like a centralized body, a regulatory body, a governing body, a bank, to make the Bitcoin transactions go through. Any users with the mining hardware and internet access can be the participant and contribute to the mining community. The process is solved based on a difficult mathematical puzzle called a proof of work. The proof of work is needed to validate the transactions and for the miners to earn the reward. All the miners are competing amongst themselves to mine a particular transaction. The miner who first solved the puzzle gets the reward. So the miners are the network participants who have the necessary hardware and computing power to validate the transactions. 3 concepts of blockchain. To understand the Bitcoin mining, you first have to understand the 3 major concepts of blockchain. Number 1. Public distributed ledger. A distributed ledger is a record of all transactions maintained in a blockchain network across the globe. In the network, the validation of transactions is done by the Bitcoin users. Number 2. Sha-256. blockchain prevents unauthorized access by using a hash function called the Sha-256 to ensure that the blocks are kept secure. They are digitally signed. Their hash value once generated cannot be altered. Sha-256 takes an input string of any size and returns a fixed 256-bit output. And it's a one-way function. You cannot drive a reverse if the input reverses fully from the output. Number 3. Proof of work. In blockchain mining, miners validate transactions by solving a difficult mathematical puzzle called a proof of work. To do that, the primary objective of the miner is to determine the nonce value, and that nonce value is the mathematical puzzle the miners are required to solve to generate a hash that is less than the target defined by the network for the particular block. And next, solving the puzzle, hashing. In the Bitcoin network, as mentioned, users call the miners as trying to solve the mathematical puzzle. The puzzle is solved by varying the nonce that produce a hash value lower than a predefined condition, which is called a target. A mine verifies the transactions by solving the puzzle and adding the block to the blockchain when it is confirmed and verified by other users. As of today, Bitcoin miners who solve the puzzle get a reward of 12.5 Bitcoins. Once a block is added to the blockchain, the Bitcoin associated with the transactions can be sent and the transactions from one account to other can be made. To generate the hash, Bitcoin miners use the Sha-256 hashing algorithms and define the hash value. If it is less than the defined condition, the target, then the puzzle is deemed to be solved. If not, then they keep modifying the nonce value and repeat the Sha-256 hashing function to generate the hash value again. And they kept doing this process until they get the hash value that is less than the target. Okay, let's get straight with the example of transferring of 10 Bitcoins. Let's say I want to share the 10 Bitcoins to you. To do that, what would be the steps to be? First, transaction data is shared with the Bitcoin users from the memory pool. That transaction is in the unmined pool of the memory transactions. In the memory pool, unconfirmed transactions wait until they are verified and included in the new block. Bitcoin miners compete to validate the transactions using proof of work. The miner who solved the puzzle first shares the result across the other nodes. Once the block has been verified, the nonce have been generated, then the nodes will start granting their approval. If maximum nodes grant their approval, the block becomes valid and is added to the blockchain. The miner who has solved the puzzle will also receive the rewards of 12.5 Bitcoins. Finally, the 10 Bitcoins for which the transaction was initiated now will be transferred from me to you. Then let's finish today's video by making the front and tail in the same way. Like as we started this video with the Ray Dalio, let's finish with him. Among Ray Dalio's other comments on the Bitcoin, there is a great insight. Bitcoin has succeeded in crossing the line from the speculative idea to something likely to have value. Because there aren't many of this gold-like cohort for the wealth asset that can be held in the privacy, and because of the size of their market are relatively small, there exists a possibility that Bitcoin and its competitors can fill the growing needs. Another risk is supply. While a finite number of Bitcoin can be mined, there is nothing to stop new coins from being created, and I assume that better ones will come along and displace this one. When the Department of Defense cannot protect a system from being hacked, it would be naive to be totally comfortable that digital assets can be hacked. If there were restrictions on the usage of the Bitcoin, demands for it would be plunged. Rather than it being far-fetched that the government would invade the privacy or prevent the usage of Bitcoin and its competitors, it seems to me that the more successful it is, more likely these possibilities would be. I and my colleagues at Bridgewaters are intensely focusing on alternative storehold for wealth asset and expect Bridgewaters to soon offer the alt cash devaluation of money and credit that we consider to be the major risk and opportunity, and Bitcoin won't escape our scrutiny. Thank you so much for watching my video, and please subscribe to my channel and show your thumbs up. and I will hop around the world and bring lots of thousands of funny stories to you. Let's hop around together. Thank you, and see you again.